Get the Intel, the podcast meant for those of us trying to find out what the hell is going on in the field. Here we discuss tools, techniques, and approaches that you can implement to streamline operations and let you focus on your craft.
Hello, this is Chad Gill. I'm the host of the Get the Intel podcast, where I talk with leaders in contracting, management, and really anyone helping us do business better. This episode is brought to you by Workforce Recon. Workforce Recon is a project tracking software that connects the office to the field crews. The app Field Recon is built with a field-first mentality, developed by contractors for contractors. It includes time and asset tracking, messaging, job documentation, and scheduling all in one place so you can see what's going on in the field. So if you're tired of finding out what happened days later, check us out at workforcerecon.com and see your operations in real time. So today I'm excited we have Dennis Najjar on with us. He's the co-founder of accountingdepartment.com. He's worked in public accounting since 1982, provides virtual accounting to small and medium-sized businesses. He's a certified public accountant in New Jersey and Florida. I'm guessing that means that he's one of the snowbirds that runs from between those two. And he graduated from Rutgers University with a degree in accounting, which is okay. Not all of us can go to VMI. We got to have some other schools for people too. But Dennis, thank you for being on. Really appreciate you taking the time with us, and very excited to kind of get some knowledge from you.
Yeah, great to be here, Chad. Well, let me clarify one thing. No, I'm not a snowbird. I was born and raised, spent most of my adult life in New Jersey, and made the plunge to head south for warmer weathers. And I just couldn't give up the license in New Jersey, but I had to get one in Florida because that's where I was residing. So I have licenses in 2 states. Doesn't make me any smarter. It just means I pay a few more in fees.
Yes. Perfect. I don't know. I mean, can you pay more taxes than you're paying in New Jersey? I don't know.
We pay nothing down here in Florida, if you didn't know.
Yeah, that's fantastic. That's what to say. That's probably a good situation.
Yeah.
So that's awesome. So you're probably not cold today, so that's good at least.
Nope, I did 75 and sunny.
I had the opportunity to come down to Orlando for a field hockey tournament with my daughter last month. And I don't know I left here. It was 40 degrees. I landed there. I think it was like 25 degrees, and it was windy. And I was like, this is not the Florida I signed up for. These brochures have lied to
me. It does happen once or twice a winter.
Well, so today, kind of just give me a quick rundown of, accountingdepartment.com, what they do and kind of how you got into that.
Right. Sure. So actually it started in the 90s when I started my own accounting practice, and I was dealing with small businesses like yourself. It was at a time just when QuickBooks came out, and there was some interest in small businesses doing their own bookkeeping. And I didn't pay much notice of it because I had a lot of clients, and the majority of them didn't want to do that. But I had a few that went off and started working on their own QuickBooks. And I woke up in January of the following year, and I said, "Oh, I forgot about Chad. I better ask him to send me over his balance sheet and his P&L so I could start working on his tax return for the business." And after I pulled the curly-Q paper off the floor from my fax machine, dating me quite some time ago, I realized that the balance sheet and the P&L were not usable. So I proceeded to go out and work with these businesses, even though they thought they were going to do it on their own, and began helping them and trying to train them to really become more bookkeeper-like. Well, after several years of trying that, it really came to the conclusion that it's just not their mindset. It's not their skill set. It's not as easy as QuickBooks makes it sound. They're great at marketing, but they're short on technical, when it comes to somebody being able to actually do it correctly. So that led me to start a business. With the time, it was called Balance Your Books, and it was supposed to be an outsourced provider like we have now at accountingdepartment.com. I started on my own, did that for a couple of years, didn't really get a lot of traction because down and true, I'm an operations guy. I'm an accountant. I'm not a sales guy. I'm not a marketing guy. One day in 2004-ish, I stumbled across my partner, Bill, who doesn't know anything about accounting, but he's pretty slick at meeting people, connecting with them. His sales skills were top notch. We happened to be in the same place, if you will, at the same time, or the right place at the same time. And literally after 2 meetings, we shook hands and we decided to start what we now call accountingdepartment.com. And that was back in 2004. So 2004 was not an era where businesses were outsourcing at that time. And so we began working with small businesses, basically replicating what I was trying to avoid 10 years before that, and taking over the day-to-day bookkeeping for small contractors, dental offices, retail stores, whoever would give it a chance, because it was different. You were saying to somebody, hey, stop trying to hire somebody internal and give the work to us. We would do it virtually. And that was a little bit of a scare back then for many businesses. But as the years went on, those tables have turned. Here we are 18 years later. We're 162 employees, clients across the country, a few international. We're dabbling in a lot of different applications, primarily QuickBooks, but we do work in NetSuite, and there's a number of add-ons that we have incorporated to make the technology piece important in working with our clients.
So that's one thing you talk about, I would call it, how many apps do I have to have? I always feel like I'm one app away from success. But, your tech stack or those kinds of things, so right. You've got QuickBooks and you've got outsourcing. Do you pull other programs in? Is that something that you're okay? I mean, there's expense management, there's time tracking, there's all those things. Is there, how do you see people working with that?
Well, that's one of the things they're looking for us to bring to the table. I mean, there is a mindset today that was different 15 years ago about becoming more efficient using the technologies. And because they Intuit, this is where they shined, right? They made this app. Now QuickBooks Online allows a lot of things to connect to it. It really did bring a lot of extensions to the table. So we regularly use applications like Bill.com to automate and make paperless the bill paying process. There's no more printing of checks, signing them and stuffing them in an envelope and finding the postage stamps. Everything's done electronically. Time tracking, no more paper timesheets. Again, some of these things happened because creatively we had to figure out how could we do the bookkeeping for these businesses. If they had paper timesheets or time clock, how are we going to get that in order to process it? So installing time applications. And then the third one you mentioned, which again is a staple of the top three we pretty much bring to most new clients, is expense reporting. Those credit cards. And if you're in a business like a contractor and you're trying to do job costing, the time and the place to remember what something is for is when you make the charge. It's not 30 days later when you've got 27 Home Depot charges on your American Express and you say to the project managers, what job is this for? It's gone. It's out of sight, out of mind. So being able to, give them something right when they're making the charge that they could identify was a game changer for businesses like yours.
And it's worth pointing. I mean, 2004, this isn't that's recent to some of us,
Right.
I mean, to me, I need that to be recent. I was already out of college and doing stuff. You're becoming that old guy now. But this isn't like high speed, everybody's not online at this time. So, I mean, I would think that a lot has changed as far as what you can do virtually. But yeah, like I said, virtual at that time, that was something.
Well, back then we weren't using many of these applications, A, because they didn't exist, and B, the businesses that we were able to get to buy into this idea of outsourcing their work to us didn't need them. They were small. They weren't going to try to do job costing. They were a $200,000, $300,000, $400,000, small business. Could be, I think at one time we had a contractor, we had a fence guy, we had a Meineke muffler store, so they they just needed somebody to do the nuts and the bolts and deliver it consistently and accurately, which was the problem they were having. Couldn't find people to do it. But as we grew over time and the technologies began to catch up, we were on the forefront of that, saying, hey, how could we use this? And how could we use this to go after different clients? And hence started driving it in a different direction.
And it's funny because I found in our niche, that's how we built the software at, Field Recon, is software has been a slow creep into construction. You would think it would be a huge thing, but it's not one of these industries where software has become a big thing as much as it has in others, in my opinion. But when you talk about, so time management, I get it. Expense tracking, I get it. Job costing,
the holy grail.
And it seems like one of those things, it's over there. I know it's there. It seems really hard. Is it, Is it worth it? Is it as hard as people think it is? Is it just getting over the hump? How do you use it? I don't know. Where do you start with that? Or
Well,
what is it? What specifically is job costing?
job costing is taking all of first of all, capturing all of your COGS, cost of goods sold expenses in that section of your P&L. And so you typically would have your direct materials, you'd have your labor, your subcontractors. So getting it all into that bucket is really the first step. And so when you take your revenue and you subtract out your cost of goods sold, you end up with what's called gross profit. And as I like to talk to businesses about gross profit, in my opinion, you ask different accountants, you get different answers. But me, I always like to qualify that. When you talk to me, here's what I say. Gross profit is the lifeline to every business in this country. And what I mean by that, very simply, is it is the only place in your business that creates cash. The difference between what you buy something for and what you sell something for leaves this thing called gross profit left over. From that gross profit, you then need to cover all your operating expenses. You need to cover your salary. You want to pay out some bonuses. You want to go on a vacation. You need to have monies left over after you've spent the gross profit on all the things to support a business. So really the most important, in my opinion, number to be monitoring in any business is that gross profit. Now you measure that as a percentage. So within each industry, there are norms in terms of what you could expect from a gross profit. Some could be in the 50s, some could be in the 40s, a couple could be in the 30s. I mean, the lower you get, the harder it is, because that means you've got to have that much more volume to produce enough of that thing called gross profit to pay all the expenses to run the business. So the idea is to monitor it. And when you do it at the company level, we're not talking job costing yet. When you're doing it at the company level, it does give you a snapshot to your entire book. So I'll just give you a very simple example. Let's say you just had two projects you worked on, and you did that calculation, and it said you had a 50% gross profit. Sold something for $1,000 between your materials and your labor. It cost you $500, and now you're left over with $500. 50% gross profit. On the surface, that seems wonderful. Now, where job costing comes in is it takes that total and breaks it down, in this case, by my example, to the two jobs. And let's just take that one step further and say one job had an 80% profit, the other had a 30% profit. And when you looked at the total, you had an average of 50. It looked good. But in reality, you're making a killing on the one. So what did you do right over there? And you want to do more of that. And on the other hand, you got this one that you only made 30%, and you're kind of sucking wind. And where did we go wrong? And how do we do less of that? And that's really what job costing comes down to. Take that bucket and divide it into individual pieces that make up each one of the, in this case, projects that you're working on.
So a lot of times, and I think you kind of answered it, but maybe we'll restate it. But when I talk with other contractors about job costing, one of the most common answers I get back is, "Look, I'm on the job. I've got to spend what I got to spend to get the job done. What is this information going to do for me?" And kind of what you're saying, the answer may not do anything for you, especially if it's a shorter term job. It may not do anything for you on that job, but it's the next job that can help you with.
That's what you need to learn from that. So you should initially, when you quote a job, you should have in your head how much of the materials, if you're doing it on the fly, if you're doing a quick, deck repair or something, and you go in and you kind of look at the situation, you can see I need so many of the slats and so many of the boards and maybe one of the supports underneath. You should have an idea what that's going to cost you. And if you don't, you need to have some sort of an Excel tool that might give it to you, or tap into some material supply store where you can see what those items cost you, so you can price that out. And then from there, you need to add in, what is your anticipated time on this? Are you going to do it? Do you have a helper? How many helper hours do you need? And now you throw that into the equation. And then from there, you want to mark that up for the anticipated profit that you would like to plan for. So this is where you can use it beforehand, so that your answer to your question is, Then you need to look at how it actually turned out, right? So you have like what we would call a budget to an actual. A budget is a fancy word, but basically it's what I just said. Kind of estimate where your costs are going to be, arrive at what you expect or desire your profit to end up at, and then compare that to the end results. And if it's close, then you're doing a good job at estimating. If you're not within the ballpark, then that's telling you that you're not estimating adequately, and you're only going to pay the price by underperforming in your margin, which will ultimately affect the ability to pay expenses, for you to get paid, for your business to make a profit.
So when you're job costing, things like field crew, we have field crews. Most people here have field crews. Are you tracking fuel in trucks and stuff like that? Or do you just say, I'm going to put that in overhead and I'm going to have an overhead number that I put into my budgets and stuff like that? How do you determine what you put in there and what you say, like I have consignment materials, I have, standard, I don't want to track rolls of plastic,
Right.
but, where do you draw the line as what's worth tracking, what's not worth tracking, and whether it's overhead or cost of goods sold when you're tracking it?
Yeah, it's a great question, and it's one of the things that you have to really take a look at. The way I like to approach that question when we're talking to prospects is very simply this: is the cost of tracking something worth? You're going to take more than it's worth to do. Is there a return to be had on looking at it? So I'll give the example. Let's say if you're doing the deck example and those are the pieces that you need. That's great, but you probably also need some flashings and you need some nails and a couple of other things. I'm sure I'm not a handy guy, but I kind of watched somebody put a deck up one time. And so those things you typically would buy in bulk and throw in your truck, and you'd have them all the time. You wouldn't go buy 7 nails because you're putting in 3 boards. Those things you shouldn't bother to track. It's not worth the costing. It's not going to be significant enough to worry about. Now, from there, you got a couple of ways to handle it. You could handle it by just making an arbitrary, I guess we'll call it a WAG, a wild ass guess, as to what those sorts of, I'll call them shop supplies, cost on every job or on this job, and you just charge it to the job. But most of the time, those are not material enough. They're not going to affect your margin. If you're spending such a large amount on incidentals, it's no longer an incidental. And then you should be tracking it, right?
That's a good way to put it.
Right. Now, from the truck perspective, it's a common problem. I don't recommend trying to track the truck charges to individual jobs. It's just not, that should be really part of your overhead. Granted, it is part of delivering the service, don't get me wrong, but from a small contractor's perspective, to try to track the miles and multiply it out by some rate and charge that rate, it's way too much detail in accounting. They'd rather be at the bar having a beer than worried about, tracking mileage and charging a job. But you might want to be tracking all of your expenses by a vehicle to see when that vehicle's end of life is approaching. So if you find you're spending too much for repairs and maintenance, it might be at the point where you want to invest in something newer so that you don't continually have that unknown expense. You lock more into a fixed cost of a payment for the next 3 to 5 years type of thing.
So that makes sense.
Yeah, so the direct costs, the hard costs, the ones that you're specific to the job, those would be the ones you want to target for job costing. But what I refer to as the shop supplies, I would be more inclined to just accumulate them in cost of goods sold, because they are part of what goes into it. And from there, you can make the decision, throw a little bit at each job or not. It doesn't matter. But the idea is it should still be in there because it will give you an idea what its impact is to the overall margin. Remember that first example where you just had all the jobs reported together? It'll factor that in there, and then you'll have a better idea how much that's costing you overall, 1 or 2%. When you run QuickBooks, you can easily add a column that will give you the percentage of each row as it relates to the revenue. And so when you run that, if you add that to your report and you look at it, this shop supplies line that I'm talking about, at 1-2%, you can kind of get a sense, well, that's what the impact would be to every job after that, 1 to 2%.
Yeah, so that just kind of gives you your idea. And when you talk, so this is kind of a quick kind of aside. When you talk about markup, so when I first got started, I read a book called Markup and Profit. So how do you, if you were to briefly describe how you come up with a markup, you know, I'm going to pay, it's going to cost me $1,000 to do the job. I want to make 20% on the job for profit. So I'm going to charge, $1,200.
Right.
But is that markup? Like, how do you normally recommend people to come up with their markup? Because if you've got overhead and you got profit and you got commissions and stuff like that.
If you're really serious about your accounting, the way you approach it is you have to start by putting a budget together for your business, because a budget's going to tell you what your operating costs are going to be. That the stuff that comes after gross profit that I referred to. So the way I like to do budgeting for small business, kind of the keep it simple method, bottom up. Start from the bottom and work up to the top. What do I mean by that? Well, start by planning, what profit do you want to end up? After you covered all your expenses, what do you want on the bottom line? Pick a number. There's no right or wrong. So let's just say you pick $10,000. Okay.
Now, is that number the number I'm going to put in my pocket as an owner, or is that the number that's my profit? Then now I've got to pay liabilities or loan payments and stuff like that.
Well, probably both. You would start, that would be your profit that would then be available for you to either pay yourself or that you're paying debt.
Okay.
Right. So that number covers, very astutely put, by the way, covers two different things. So 10 might not be the right answer. It could be 50 because you've got a lot of loans and you've got an expensive lifestyle and you want to fund for that. So whatever the combination of those two is, that's what you're trying to plan for. So from there,
so my debt payments and my wife's money add up to my profit.
That's correct. That's right. Pretty much that's what it comes down to. Right. Our bosses.
Or your husband's money. There's women-owned businesses here too, so we're good.
Somebody reports to everybody. Somebody always reports to somebody.
Everybody's got a boss.
I'm at the top of my company and I go home and I grovel to my wife every night.
That's the joy of marriage. Everybody does it. When you're doing it right, both of you think the other one's in charge.
And I love her to death, but she's a 5-foot dynamo and she's like all Italian all over me all the time. So I know who's boss.
That's right.
So we start with that bottom number. And then from there, we start adding back all of our expenses, all of the operating expenses, the phone, utilities, the rent, the administration salary, your salaries, insurance, office supplies, whatever things that are necessary to run the office. So the definition of general and administrative is anything that supports the business. So me paying rent doesn't have anything to do with my cost of goods sold, or me paying an administrative person in the office doesn't have anything to do with the cost that it on the running of the jobs. So all of those things, now you're going to end up with, you take your profit, you add up all the rows of expenses, and now you end up at gross profit. If I have this gross profit, then I can cover these expenses and have this left over on the bottom. Okay, so what's next? The next thing is, if this is the profit I have to work with, what is it going to cost me? How many jobs am I going to do? Or, what's the typical size of the job? So now you're starting to bridge over a little bit into forecasting, and it's a scary word, but basically what it is.
We're on the third rail of contracting anyway, when you said budget. So we might as well keep going.
Oh, I thought I made it nice and simple to kind of visualize how it works. It's easy for me to say it, I guess. But the forecasting basically says, okay, what do I think I can create in job opportunities? I'm going to do a kitchen remodel. I'm going to do a roof. How many roofs can I do based on how long they'll take to do? And so and then there's a materials cost, a labor cost, subcontractors. So now you've filled in your cost of goods sold. And guess what you have now? If I need this profit and it's going to cost me this, then that tells me how much I have to sell. So that's why I call it bottom up. If you start at the top, it'll just be a moving target in terms of, all the expenses. Is it enough? Or really the profit ends up being what's left over. What we're trying to do is plan for what's left over, not arrive at what's left over. So we're working all the way back up to the top. You come up with your revenue, and now you have somewhat of a plan that you can work against throughout the year. So that's where the fancy word budget comes in. If I know I'm going to have all these expenses all year long, and I think I need this amount of revenue to cover it, well, as each month goes by, if I think I need 10 roof jobs and I'm only at 6, well, guess what? I'm going to be short. I'm still going to have all these expenses to cover: the rent, the utilities, the phone, the insurance, which really translates into the bottom line takes the business owner takes it in the gut, because nothing on the bottom line, loans get paid, and you don't bring home a very big check. And now we're back to that whole dilemma: what happens when you go home with the check,
Right.
with the boss?
Yeah.
So
Small
that's
check
my
versus
simplified
no
way
check.
of that's my simplified way of trying to help somebody visualize how to plan, how to arrive at a gross profit.
No, I think that makes sense, and I think the bottom up is a. I hadn't heard that before. That's a good. I'm a big fan of Mike McCallow's in the profit first. He's like,
Mhm.
hey, you take whatever revenue you have and you take out the profit you want to have, and that's what you have left to run your company. And that resonates with smaller contractors, I think, because we're like, we look at our checking account that tells us whether we're having a good day, good week, good month. But it doesn't have to be that stressful. It can be. You don't have to wake up, log in, and find out that you're in a bad spot. You can say, hey, look, I have a budget. That tells me how much overhead I need to account for in every job. And then if your revenue is down, then you either need to cut overhead to maintain the profits you want, or you're going to have to get revenue up, preferably. Or if your revenue is up, I guess at that point in time, you can either increase overhead or your profit should be going up, because your overhead doesn't necessarily change with revenue. Your cost of
Right.
goods sold does, but
Right. Right. It's not that easy to change those operating expenses, though. You sign up for an office space, that rent's going to be there whether or not you had a job that month or you had 7 jobs that month. So those
right.
are what we in the accounting field would call those fixed costs. Once you incur it, it's fixed for the duration. So it's not as easy to cut administrative costs or overhead costs as it would sound in theory from that statement. But that's why it's important to be driving from that revenue. Once you figure out what the margin is that you need, the gross profit, and you back up through your cost of goods sold and you arrive at that revenue, that's the one thing you can control at that point. Of course, if you can't make that happen, you won't incur the materials and the labors, and so that will go down. But of course, that margin will also not be there to pay those operating expenses. So that squeeze will come in. So I mean, I know the program. I've read the book. I've seen him speak. Conceptually, it does work if you have the discipline to move the money from one account to the other. What the challenge will come into, of course, if the sales don't happen and the profit's not there, but the bills came in, they still need to be paid. Now you've paid yourself, that's fine, but there's only so far you can push your reputation, if you will, with your vendors who don't get paid, or your your subs that you can't pay because you didn't make the profits that you needed, before you start to cause other business strains that that have to be dealt with.
For sure, the cost of goodwill and your own
Right.
integrity and things like that. Yeah,
Yep.
yeah. I mean, it's a bellwether, but I think a better way, like what you're talking about, is that is that something that you see, like when you bring on new clients and stuff like that? Is that one of the more resistant things? Is, hey, you need a budget, you need we need to track these things. Do you find that people are resistant to that because it feels like control, or how does it normally go?
Well, I always like to make a joke because this is not my favorite topic, but how often do you exercise?
Me, I actually pretty much maybe 5 times a week.
You do. Well, this is a poor time to ask that as an example.
Yes.
I actually
I don't
don't
do it
like.
because I'm healthy, though. I do it because that's my stress relieving, and I have
Oh,
4
is it?
kids, so it's either
Okay.
just talk to them or go for a run.
All right. Well, I was never one of those guys that really engaged in physical activity. And so you really have to be holding something to my head in order for me to want to do it. In fact, I started working with a trainer about 5 or 6 months ago, and he's doing nothing. Don't get me wrong. Great. I love the relationship. I love the discipline. But I said to him outright from the beginning, the only reason why you're here is because if I'm given a choice between doing A or doing B, A being exercise, B meaning get behind my computer and work, I'm going to gravitate right to B. And it's the same thing with business owners when it comes to budgets. I would tell you, I would guess in our business, we probably have less than 10% of our clients work off of a budget and a forecast. That's not a
Really?
good thing. That's because listen, we bring it to the table, we offer it to them. We can't force it upon them because it is a working relationship. We need their input. If we say you're going to do this in revenue to make the budget work, but yet they don't buy into the whole concept, well, what good does that do? So, the key is you have to want to do it, or you need a coach to help you and commit to it. So that's the first, like me with that exercising. The guy's here every morning at 6:30, right? So I know I have to get up and I have to be ready and I have to, I'll say go through the motions for an hour.
Yeah.
But
Yeah,
the idea
exactly.
is that he's my coach in forcing me to do what I need to do. And it's the same way with budgeting and even forecasting. If somebody is serious, you guys don't have to do all this stuff. You got to align yourself with somebody who can help you do it. Because in the end, we do need information from the client. Again, as my example said, I can't tell you what your sales are going to be, but you have to, have some input on that. It's a joint effort. We'll ask all the questions, we'll ask all the follow-up questions, but in the end, it is a joint effort.
So, kind of coming to the end of our time, but I wanted to ask, one more thing. When you're looking at outsourcing your accounting, obviously your financials are something that you're just, you're talking about turning over your checkbook, your accounts, your knowledge, everything to someone. And admittedly, like for me, you're like, hey, here's something I'm not good at, but deeply concerned about. And then you say, okay, well, how do I check that? And one of the things that is, you want to have your bookkeeping separate from the person who's doing your tax preparation. Is that a good checks and balance to have? Is that is that something you normally recommend, or what?
Frankly, it's not a necessity. It's a question of whether or not that's a discipline for them. So I had a tax practice. I work with small businesses. I did the bookkeeping for them, where they drop everything. This is in last century, as I like to call it, in the 90s, and I transitioned 100% to this because I believe so strongly that this was my calling, because this is what I saw the pain point with every business. It's just this foreign language that we call accounting. In fact, I typically have made a joke with business owners, and I say, you do know the alphabet, right? A to Z, right?
Sure.
And if I show you something, you'll be able to recognize those letters, right? And they'll say yes. So then that means you should speak any language, because we all use the same 26 letters. Well, most of the world does. And then I said, the number is 0 to 9. You can count, right? Can you count from 9?
Sure.
And they would count. And what are you doing? And I said, well, if you can count to 9, you must understand accounting then. So there's the fallacy in it. Just because we know the alphabet doesn't mean we can speak a foreign language. Just because we know 0 to 9 doesn't mean we understand accounting. And so who you use should be committed to the process. I got out of the taxes because I found that this was full time. But that doesn't mean there aren't tax accountants who can help with this. It's a question of helping with it rather than just doing it for a tax return. Because what we do and what you're looking for and what your listeners need is forward thinking. They don't need historical. See, we do the historical to get us to a point to be able to do the forward thinking. We don't do the historical just to be able to say we did historical. Because today, for every business, it's about using the numbers to make tomorrow better. And that's what business owners need to be focused on. Let somebody else do this part, the crunching of the numbers, and then meet with them for what we've come to label advisory services. That's where you're helping walk through interpreting the numbers, action plans, the budgeting and the forecasting that someone else is doing, but they're bringing those things to the table to help you work on what is most important, which is growing the business.
And I think it's an important thing to point out to people too, is like, just because it's like people that don't want to go to the doctor because they're afraid of what they're going to tell them.
Mm-hmm.
It doesn't change your condition, not at all. And knowing, just they're like, hey, that bone is broken. They didn't break it. It's just broken. It was broken when you got here. It'll be broken when you leave. But we can splint it. We can tell you how to avoid it. We can tell you how to heal it. So it's not one of those things where, and much like a doctor, if you don't go, if you don't find somebody to tell you, then it is going to fester.
Correct.
But and I think looking at accounting that way is something, because it is, for handy guys and girls who are going out and doing jobs, so they're like, that bookkeeping thing, it's just not. I'm in the real work, but it's none of it matters if it doesn't go. You may not care if, it doesn't matter. You have to make it all work together.
Right.
So I appreciate what you're doing at accountingdepartment.com. It's great. I can tell you, I went through the process with them, and it was really good. It was very, very in depth. Asked me lots of questions that, I didn't even know I was going to be asked, but it helped out a lot to understand more of what I don't know, and then how to have that relationship with my bookkeeping service and that kind of thing. So, wildly beneficial. I really appreciate it. Dennis, I appreciate your time. And again, it's accountingdepartment.com. We'll put a link in the podcast for it. And, I highly recommend reaching out to them and, going through the process. I mean, there's a lot of value just in talking to you guys.
Great. Well, thanks very much. I had fun. I hope your listeners got some useful information and it made accounting and bookkeeping a little less scary.
I hope so. Thank you very much, Dennis. And we'll talk to you again soon, I'm sure.
All right. Take care, Chad.
Thanks for listening to Get the Intel. We'll see you next time, and be sure to click subscribe to get future episodes.